welcome everybody to the Ultimate Solo 401k, which is one of our ultimate self-directed plans we offer here at Broad Financial. And as you'll see, the subtitle there, the best kept secret to maximizing your retirement investing potential, is not exaggeration. It really is. In fact, I'm giving a preview of number two, is that this is a book that I've written called The Ultimate Self-Directed IRA. Has a chapter here on solos, but chapter two is, why don't more people know about these plans, especially about the solo? They don't know about self-directed plans, and they know even less about the solo 401k. And I hear this almost every day from somebody. Why didn't my accountant tell me about it? Why didn't my financial advisor tell me? Why don't I know about it? That's a good question. You can ask that later on. We'll get to that, but it's not as well known as it should be. In short, there's about $20 trillion of American retirement monies out there invested, and perhaps 1% of it of the people are using self-directed plans. At least we feel at least 10-15% could be potentially using it. So it is a secret. It's not a good secret to be kept secret, and we're going to hopefully educate people and get the word out, because again and again I hear people telling me that this is a wonderful thing. I'm glad they found out about it. Why didn't they find out about it earlier? So without further ado, let me officially introduce myself. So I did write this book called The Ultimate Self-Directed IRA. I wrote it back in 2017. I've been with Broad Financial since 2013. Broad began in 2009. I was one of the first 10 people back in 2013. Today, we have added a custodial arm to our company called Madison Trust. Madison Trust and Broad Financial are sister companies. I like to say Broad is the older sister, but we're sister companies, are owned by the same people, work in the same office here. When it comes to IRAs, you need both the custodial component, Madison Trust, and you need the checkbook component if you want a checkbook plan. And a solo 401k, you won't need the custodial component, but I'm jumping ahead of myself. In short, Broad Financial is a company that began in 2009 to offer self-directed plans. I began in 2013. And between Broad and Madison today, we're pushing, I think, over 70, 75, 30, maybe 80 people. So I've watched this company grow from the beginning. And between emails and phone calls over my 10 plus years here, I've had exchanges probably with at least 40,000 people, maybe more. Well, more than 40,000, maybe 50. But the bottom line is that I've gone back and forth a lot of times with people. And back in 2013 already, I'd been here 4 years. And a lot of times I talk to a person for we set up a 50-minute call or whatever the time frame is, and the person says, Jeff, excellent information. Tell me what I don't know. And I couldn't tell him anything. So back in 2017, I wrote the book. It took actually 6 hours one Sunday afternoon, 6 hours, because I'd been doing this again and again and again. We tweaked it for a couple of weeks, but essentially the main book was written in 6 hours, which is why it is a thin book, which is excellent to be a quick read, to give you the overview that you need. Even though it's an overview book, it is actually got enough detail that I know people that know about these things have learned from it. But it's a quick read. So now when people ask me, Jeff, what don't I know? What am I not asking? So I always tell them my same line. I don't know what you don't know, but I do know if you read the book, I'll know what you know. So again, that's the Ultimate Self-Directed IRA. I do have to forewarn you, if you want to buy it, it's $2.99 to download on Amazon. So you got to get your pocketbook ready. You got $6 for the audio version. Audio versions seem to be doing much better. I'm selling a lot more audios than any other type, but there's also the softcover version like this. You can get one of each, and give them to your friends. The truth is that is an excellent gift to people that are in any way, shape, or form thinking about diversifying and expanding their retirement. And it does answer questions that I can't necessarily get with a person in 15 minutes. And then usually when we have a follow-up call, it's on a much higher level, and we're dealing with things. The book has, just to let you know, I might as well just say, it's got basic information about the plan, what you can invest in, what you can't invest in. It's got examples of real people, real stories of people that I've spoken to over the years, and some interesting stories there. We'll get to that. It's got information about the IRAs. It's got information about scams and bad customer support, a very underrated IRA or 401k killer. If you don't have a company that backs you up and has a track record for that, it's one of the things that we feel we are distinguished and separates us from others. We have a tremendous track record for support. You'll see that at the end. We have over 1,500 testimonials out there, and people, if they don't get good support or no support or wrong support, they could risk the whole maybe hundreds of thousands of dollars that they have in their IRA and 401k. And, you really need not just a great plan, which is what we offer, but a great company, which is what we are. You could talk about Roth monies, traditional monies, information about taxes and something called UBIT and loans and leverages and co-investing, and a special chapter just on solo 401ks. There's a lot of crossover between IRAs and 401ks, which we offer. Today, we're talking exclusively about the solo 401k, and amongst the self-directed plans, we're going to see that the solo 401k is really the best of them by far, not even close, if a person qualifies. That's a big if. Everyone qualifies for an IRA. Not everyone qualifies for solo. We'll get more into that. And you see that nice couple on the front. That's the way I looked 20 years ago. No, I'm kidding. A nice looking couple there. But the book has been really very helpful in expanding what I do in my conversations with people and emails with people, and it doesn't break the pocket, to get it. So that's who I am. Why am I VP of marketing and stuff like that? I mean, I began when the small company did a little bit of, you wore a few hats, or helped set up some websites and the book and the information and different things. So I've had my wings spread over both sales and marketing since the beginning here. All righty. What is the ultimate self-directed IRA? Let's read that. The ultimate solo 401k. The ultimate solo 401k enables you to invest in what you want when you want. It empowers you to utilize your strengths and know how to discover and take advantage of investment opportunities that will help you diversify your retirement account, maximizing its potential for growth, financial growth, and safety. An important word in that paragraph is diversify. Why do people do these plans? Why don't you just do a regular solo 401k or IRA at Fidelity or Schwab, which is what we call a brokerage account? Now, and the answer is that there's a few answers, and the book talks about it, but diversify is one of those answers. I was just on the phone this morning with somebody about this. When they talk about diversification in the stocks and bonds world, they mean different types of stocks and bonds, different industries that you might be spreading out to technology and real estate or whatever it may be. But what we mean when we say in self-directed, in the self-directed world, we mean something much broader than that. Not just a stock or bond, a mutual fund, but an actual tangible asset like real estate. We'll get more into that. Crypto. These are actual tangible things. So the saying goes in the marketing world, in the stock market world, when the market is high, the ships rise, and when it lowers, all the stocks go down, no matter how diversified you think you are. But an alternative investment, which is what we're offering, which what our plans give you the opportunity to invest in, are things off of Wall Street, and that's true diversification into an actual physical, tangible thing. We'll talk about it, but just an example, for instance, a friend of mine many years ago invested in a piece of real estate locally, and for 15 years it was terrible. It lost money. It was doing horrible, right? And then all of a sudden that particular area picked up, and his investment, I don't know if it did it 10 times, it did a tremendous jump from losing money. So even when the market and things drop, real estate, because it's a physical thing, if you hold on to it, the price may fluctuate, but it's an actual tangible thing. And that's a level of diversification that you don't get just with stocks and bonds and paper investments. So this is one of the attractions of a self-directed plan. And I should have taken one step back. We call it the ultimate solo 401k, but what we are is a self-directed company. Self-directed in our industry means more than being able to go beyond Wall Street, beyond stocks and bonds. In a brokerage, they might call one of their plans self-directed. That means you can invest in whole different types of stocks and bonds and mutual funds and ETFs. We mean much more than that. Yes, you can use our plan for stocks and bonds and mutual funds and ETFs, but we mean to be able to go beyond Wall Street and into tangible assets. So we're a self-directed company, and we're talking today about the self-directed checkbook solo 401k. We'll talk more about the checkbook aspect to it, but in short, it means that you can have your money set up in a bank of your choice. Solo is extremely fast to set up. If you expedite, which means if you pay in full, we can get you the paperwork sometimes in a day or two, sometimes the same day. But it could take a couple of days, not longer than that. IRAs tend to take a couple of weeks. So solos are much faster setup. We can talk about that too. Who's the ideal candidate? Now, as I said, everybody qualifies for an IRA. You can be retired and you can sign up for an IRA. You can move your funds into a self-directed IRA and invest in all these different things. But for a solo 401k, which is really the best plan, you have to qualify. And who qualifies? Basically, you have to have self-employment income. So there it says self-employed individuals, but really, you don't have to be fully self-employed. This is a common question. Let's say a person has a job, a W-2 job, a regular job, they're getting a salary, but on the side, they have a side gig or side hustle, and they make some self-employment income. It could be 1099 income. They could have an LLC or an S-Corp set up, but it's some sort of what they call active self-employment income. As long as you have as little as $500 per year, that's five with two zeros, of self-employment income, and that can come from real estate, it can come from consulting, it can come from handyman work, it can come from walking dogs or chopping trees. You could babysit, you could knit sweaters. I had a lady that was going to knit sweaters and sell her sweaters. Whatever it is, you can, as long as you can make that 500 per year as a self-employed person on the side at the minimum, you qualify for the solo, as long as you don't have W-2 employees working for you. You could be a W-2 employee. You could be getting a W-2 income from your S corp, or maybe your spouse is getting the S corp. Children, yourself, W-2 income does not disqualify. But if you have someone else working for you, under you, in your self-employment gig, then that would disqualify from the solo, even though you have self-employment income. But the truth is, most of the people I talk to are people that have the self-employment, but not the W-2 employees. So they are right away, they're an ideal candidate for this top plan. You see the different, when it talks about structures of self-employment, there's a sole proprietor, there's an LLC, there's a partnership, there's a corporation, which would be an S corp or a C corp. The LLCs and corporations are structures that when you make money, someone pays your LLC, someone pays your S corp. A sole proprietor is also a candidate for the solo, but that means that they don't have an official structure, an LLC, but they make their money when they do some consulting work. When they do consulting work, someone gives them a check, in the name of their name, John Doe, whatever, Jane Doe, whatever it is, and they put that in the bank. As long as they're reporting that on Schedule C, C is in Charlie of the income tax, and as long as that comes out to more than $500 per year, voila, you qualify for the solo, the superior plan. So here's some of the advantage of a solo. We talked about true diversification. The word true there means, again, more than you could find, more than what you get at your stocks, at your Schwabs and Fidelities of the world. You go beyond that into actual physical, tangible assets. Let's go down the left column. So true diversification, investment control. I mentioned that, then it says in the third thing there in the first column, the checkbook control. That means that you're going to have complete control of your investment decisions. In a solo 401k, we never touch your money, and we never tell you what to invest in, and we don't even know what you're investing in. You can call us up. We have fantastic customer support. They'll guide you and answer your questions if it's legal or not, or technically, how do you do this, how do you do that? Can you do this? Can you do that? But you and only you have complete control, 24/7 control of your money as in a bank of your choice. See, that's the bottom left there, the checkbook control option. This essential, in short, the mechanics of a solo 401k is we create a trust, a specialized trust that can hold your retirement funds. A trust is like an LLC, whereas the states create LLCs, the federal government regulates trusts. It's a legal entity, but basically it's a specialized legal entity, specialized meaning it's designed here to hold retirement funds. We create the trust, we get its EIN, its language, you name it. You might call it ABC Investment Trust, whatever it is. And you're going to take that, we'll send you the trust documents, and you can take it to a bank, any bank. People have hundreds of banks, big banks, little banks, local banks, online banks. We'll even connect you with an online bank if you, for the convenience of setup. So you'll be able to you'll set up the trust, and into that trust, you'll be able to roll over all existing retirement funds other than a Roth IRA. You can roll over a Roth 401k or a traditional IRA, and all other types of retirement funds, and you'll either roll over existing retirement funds, or you'll make contributions. We'll talk about the contributions later into that trust. But the trust now, this ABC Investment Trust, or whatever you call it, now holds your retirement funds at a bank of your choice. You have 24/7 control of it, and you'll be able to go ahead and invest it directly as you see fit. We're only here if you have questions and backup. Another advantage of the solo over an IRA, for instance, it has a personal loan feature. You could potentially, if you're strapped for cash or you're doing on something, and otherwise it would be not allowed by the IRS. You can't invest, you can't pay your mortgage or invest on your own house or pay off a loan or something like that. But with a solo, you can take up to $50,000. It works like this. It's 50% of what's in there, up to $50,000, and you can borrow it and write yourself a check, and you have 5 years to pay it back. You pay it back quarterly with the going interest rate within a half a point of the prime, let's say, high or low. Don't pick too high, because the IRS then looks at it as if you're artificially inflating your retirement. It's the best type of loan because the interest that you're paying is to yourself. But again, you have 5 years to pay it back. You pay it back quarterly. That's 4 times a year over 5 years. That's 20 equal payments with the interest. You can pay it back early without penalty, but you're paying the interest yourself. This is a unique thing to the solo. It doesn't exist in an IRA. It's a personal loan feature, and you can use that 50,000 potential up to for whatever you want. You can go again, pay off pills, take a vacation, go to Vegas if you want. Not recommending it, but whatever you want, you can use it for as long as you pay it back. So that's a nice bonus. Sometimes the people choose it just for this feature. It's a tremendous opportunity that not all that IRAs don't do, and not even there are places that have solo 401ks and they don't offer the personal loan feature. We call ours the ultimate solo 401k because the IRS gave certain guidelines, and many places don't give you the full potential. They don't give you the Roth component, for instance. We do. They don't give you the personal loan feature component. We do. So we call it, when we say the ultimate solo 401k, it's a nice word, but it really means that we give it the most potential that the IRS allows. Everything the IRS allows, our plan allows, and that includes the personal loan feature. Reduce your costs. And the solo, besides being a superior plan, it costs less than an IRA, and it costs less to set up, less to maintain. And an important thing here, when you talk about the competition, we have no transaction fees. That means, let's say you buy a property and you got to pay a bill. Nothing. We don't charge you anything for that. Other places do. No asset-based fees. Let's say you have 200,000 or 200 million in there. Our ongoing fee is the same. It does not change. We don't penalize you or punish you for having more money or making more money. Other places do. So you've got very fixed set costs with a plan that gives you ultimate control and gives you the widest potential things to invest in. In terms of rollover options here, it permits you to roll over an existing account. I mentioned before, you can roll over any existing retirement account except a Roth IRA and an inherited IRA. Roth and inherited are not allowed. Roth 401k, yes, but you can roll over a traditional IRA, becomes now a 401k. They're very fungible IRAs and 401ks in most cases. It's the Roth or traditional, which may not be, but to move an IRA into a 401k and even vice versa is usually, there's no particular paperwork. We just set up, now it's a 401k. Now your money's characterized as a 401k and has the rules of a 401k. And if you want to move it back to an IRA, you can do so. Again, except for the Roth IRA. So you've got all these rollover options. You can roll over IRAs, 457s, KIOs, a whole bunch of different types of retirement plans, pensions, and go right in there and you can start investing pretty quickly. Okay, next page. So here's also a nice thing. There's the solo 401k, one of its advantages, there's like a dozen of them, is that you have the highest contribution ceiling in the industry. IRAs, for instance, well, here you see, if you're under 50, you can potentially contribute 69,000 per year into a solo. If you're over 50, 76,500. Again, 69 if you're under, 76.5 if you're over. And you can do it in a way, in a formula. It's a little bit complicated formula. We have something called the contribution calculator on our website. Basically, you wear two hats in a solo. You're an employer and an employee. In the employer portion, you could take, for instance, if you have it depends if you're an LLC or an S corp. Again, it's a little complicated, but you could take potentially, if you're over 50, for instance, up to 30,000 of your LLC profit or your S corp salary, put it into the solo. Plus, you can then put in an additional either 20% or 25%, 20% of your LLC profit, 25% of your S corp salary, in addition to the 30,000, all the way up to 76,500. There's something called a SEP IRA, which is also an IRA, but it's for self-employed people. SEP has a ceiling of 69,000, but you have to make something like 260. The formula is different. So you have to make something like 260,000 to max out at a SEP 69,000, whereas the solo you can do it with about 180, and you can max out at that 69,000 plus. So the solo's got the highest contribution ceilings and the most favorable formula to reach it. Whatever money you take from your self-employment income, you can only contribute into the solo from your self-employment income. So if you your W-2 job is one thing, that you might even have a 401k there, but the solo is from your own self-employment income, and whatever you contribute to it reduces your tax footprint. So let's say you made $200,000 in your solo, and you put the full 76,500. Let's do round up. Let's say you put in 75,000 of the 200,000 in there. So now you're not being taxed on 200,000. You're being taxed on 125,000. Plus, you now have $75,000 in your solo to invest in all these alternative investments, all these, and as well as the stocks and bonds, if you want. So that's a tremendous advantage to the solo. In a regular IRA, there's a SEP IRA and a regular IRA. The IRA, if you're under 50, your contribution ceiling is only 7,000. That's 7,000, not 69,000. And if you're over 50, it's only 8,000. So there are all these different things we can discuss or more in detail, but the solo had by far and away the highest contribution ceiling. Then the solo has something also that an IRA doesn't have. It has what they call a bucket. So they have a bucket of Roth and a bucket of traditional. Roth is money that you paid the taxes on already up front. The advantage of a Roth is after you've had it in a Roth for 5 years, whether it's a Roth IRA or a Roth 401k, now your profits come back to that investment, not just tax deferred, I mean, not just, you don't have to pay tax deferred means until age 73, you don't have to pay taxes. Roth means that if you wait 5 years, your money's not just tax deferred, it's tax free. So it's a choice. You have to talk. You have to talk to either accountant or a financial person if the Roth is for you. If it is, it's got this. It's like this golden, the goose that lays the golden egg of tax-free profits. Forever basically. This is why this is one of the secrets is that the government was very upset with Peter Thiel. Peter Thiel took 5,000 of Roth money back in when it was 1980s, 1990s, and he invested in something no one had heard of them called PayPal. And his $5,000 turned into $5 billion or more at this point, and it was Roth, so it's $5 billion tax-free. So this is the power of a Roth. There's other examples too, but the Roth has this tremendous power, but you have to make the decision to pay the taxes up front, and you got to wait at least 5 years. Now, in terms of a solo 401k, in an IRA, if you want to do Roth and traditional, you need 2 plans. You need to pay us twice, once for the traditional, once for the Roth. In a solo, as I said, it has buckets. It has a bucket of Roth potential and a bucket of traditional potential. In the single plan, a person can have both the Roth and the traditional in there, and invest both, or make it all Roth or all traditional. It's up to you. Now, this next line on the bottom here of this page, Roth contributions, can be a little deceptive, because what that means is that Roth contributions is only the contributions for the salary portion. As I said, there's 2 hats you wear. So if you're under 50, it's 23,000. That means you have another 46,000 of what we call the profit sharing portion. But in either case, whether you're under 50 or over 50, and those are the numbers you can put into Roth contributions, you can always do what's called a backdoor Roth. This is a widely known secret that's not so secret. But basically, so for instance, let's say you're under 50, you put in 23,000 from your income, from your self-employment income. Then you make enough money to put in the other 46,000, but that other 46,000 is contributed as a non-Roth. So you've got 23 of Roth and 46 of non-Roth. But guess what? The day it hits the bank, or even, you can fill out a form with the IRS and say, I want to take this 46,000 of non-Roth and convert it to Roth. So in essence, you made all 69,000 Roth, and the same thing with your over 50. In essence, you can do all 76,500 as Roth if you do a backdoor Roth. Why would the government do this? Very simple. Uncle Sam is very happy to take our money whenever we're willing to give it. So the backdoor Roth is the worst kept secret, maybe, but it's available. It's part of the advantage of the solo 401k. Now, the advantage of the solo, if you have an IRA with us and you have a Roth, if you have traditional funds, you want to convert it, you can. But you're going to need a second plan. You're going to need some a Roth plan and a traditional plan. If you want to upgrade from traditional to Roth, you're going to have to close down one and get a new plan. The solo, it's all built in there. You don't have to do a second plan. You have to pay anything. You just have to keep the records and fill out the proper IRS forms to let them know which part of this solo is Roth and which is traditional. You'll need an accountant maybe to help you do that. Some people do it themselves. But what the point being is that the mechanics of the solo 401k allow you to do that. Well, before we go on to the next page, let me get a sip here. I just want to briefly talk over one or two of the other advantages of the solo over the IRA. And this is a biggie. A solo, a husband and wife can share, spouses can share a single plan. Let me say it again. In a solo 401k, unlike an IRA, you only need one single solo 401k if the husband and wife are both self-employed. Either your partner's on an LLC or an S Corp, or he has his self-employment gig and she has hers. But you don't need 2 solos. You can if you want. Sometimes people do want that to keep the separation, but you don't. You only pay once for a solo 401k, your husband and wife, if they're both self-employed. IRAs, the Mr. needs his IRA and the Mrs. needs her IRA, and you can share it. You can invest those monies together. It's called co-investing, by the way. Chapter 12 of the book is co-investing, but you need to pay twice. Once for him and once for the her. So the solo has this ability to have maximum contributions, backdoor Roths to the max. Husband and wife can share the single plan. We talked about the loan feature. I'm only telling you some of the features that make it an advantage over an IRA and really make it the best kept secret. And yet we're going to see what at the end that it costs less to set up and less to maintain than an IRA. So different types of assets you can invest in. We talked earlier about the nature of a self-directed plan that we offer is that you can invest in tangible assets, physical things. A piece of real estate, you could take the dirt and smell it. It's not a piece of paper. It's not a REIT, not a real estate investment trust. It's an actual piece of real estate. And again, as I mentioned in the story earlier, real estate can go up and down, but it's a physical piece of land you own. And chances are, sooner or later, it's going to come back in price and maybe skyrocket in price, like my friend did. Real estate is our most popular asset class that people are investing in. We've got 20,000 plus active clients. When I say active, that means some people close down, that the investment works, and they sell it, and then they close down the plan. You're allowed to close down the plan. Some people, it didn't work out. So they're not active people. We've sold many more than 20,000 plans, but we have currently 20,000 plus active plans, including solos and IRAs. And the vast majority of those people are investing in real estate. The second most popular asset is right there in the middle, the cryptocurrencies. Now, truth is, when crypto jumps like it has recently, crypto tends to come up and challenge real estate. And in certain times in 2017 and 2020, it surpassed. We're getting more calls about crypto than real estate. But it's built into the plan. You don't need a separate solo home here for real estate and a separate for crypto. You don't need a separate one for small businesses, private placements, all foreclosures. All these things can be done within the solo 401k. Let me just explain one of the mechanics about cryptos, which we have a separate class webinar on cryptos in the IRA. If you could do a solo 401k, you're better off with a solo. I have a solo myself, and cryptos is one of the things I use it for. Cryptos, if you want to invest in cryptos with our plan. So as I mentioned, the mechanics are we create this trust with its own EIN, its own IRS language. You'll name it, let's say you name it ABC LLC. I'm sorry, ABC Investment Trust. So for real estate, you'd have ABC Investment Trust at the bank. You sit down at the closing and you write a check in the name of ABC Investment Trust, and now ABC Investment Trust is on the deed and it owns the real estate. People, if you have renters, they write the checks to ABC Investment Trust, and everything goes through the bank where ABC Investment Trust is set up. For cryptos, you take it one step further. You have to start at a bank. You'll choose the bank, as I said, could be any bank, big or small, and then you take the ABC Investment Trust, whatever you call it, over to the centralized exchanges. Coinbase, Kraken, Gemini. We have people at crypto.com and Uphold and others, and they're investing in the name of that investment trust, ABC Investment Trust, and they're buying the cryptos just as they would in a personal account. You'll have to set up what's called an institutional account, which we can help you with. We have great support, we have a lot of experience with that. But basically, you would take the ABC Investment Trust over to an exchange, buy the cryptos there, and now the ABC Investment Trust owns the crypto. And here's the real great thing about the solo that you don't get in other places. We have some competitors out there, but when most of them are making their money and are offering a non-checkbook plan. In a solo 401k, we're giving the ability to take your this legal entity, this 401k trust, over to an exchange, again, through the bank. And now you can buy the cryptos there and you hold the private keys. So if you know anything about cryptos, that means that you now can take your cryptos off the exchange, put it into what they call cold storage, like a ledger or a treasure. And now your money is not prone to hackers or the vicissitudes of the exchange. So last year, a little over a year ago, there was that great big FTX scandal where they stole, not just hacked, the owner stole, it seems like billions of dollars worth of crypto. So if your crypto was on his exchange, FTX exchange, you got robbed, literally. If you had bought it on FTX and then put it into cold storage, you'd be safe. He had no access to it. Cold storage means you put it on some sort of little UST stick type device and you unplug it from the web. And now they can't hack it, they can't steal it. They were only able to steal from FTX because they did not choose to take the crypto that they bought on his exchange and put it into cold storage. With our plan, even with the IRA and the 401k, whichever you go with, you can buy the crypto on the exchange and put it into cold storage and protect it from all these types of hacks and potential thefts. It's really, the more people learn about crypto, that's the way to go. But we should probably have a whole class webinar just on cryptos. But these are some of the assets that you can invest in. Private placements is probably third most popular. Startup businesses, they can be very speculative. Most of them don't make it, but some that do, like PayPal, boom. And that's one of the attractive things here. Again, the single solo 401k allows you to do all these things. You don't need separate ones for this. The one-time setup fee, the ongoing yearly fee covers all these potential assets. In fact, the IRS says the only thing you can't invest in with A solo 401k is collectibles. Collectibles are things like real collectibles are things like antiques and artwork. No good. Everything else is good unless you own it. You can't use your 401k to invest, let's say, in a property you already own, but or an asset you already own. But if you don't own it, the only asset class that's off limits is collectibles. And one of my favorite chapters in the book here talks about experience. After talking about real estate and crypto, I talk about exotics. So I had a guy send me a nice picture. He used his solo 401k to buy an island in the Caribbean, and he charges Yatco as a nice fee to use it, and that is tax protected money. People are investing in Arabian racehorses. Like I learned a couple of times Arabian racehorses. Then one woman called me up and she says, no, she wants to buy a polo racehorse. Learned a lot of things here that never thought I'd learn, but all these things are potentials because they're not collectibles. Arabian racehorse is not a collectible. Or it could be if it would be, but if it was already famous. But no, it's not a collectible. Baseball cards are collectibles. Antiques are collectibles, but everything else is in play. And that's one of the wonderful things about the solo, that you've got all this whole world, literally, and not only in the US. People are using our plans to buy real estate overseas. We've got a lot of people buying in Belize, in Mexico, even India and Europe and New Zealand. I have a person. I don't think anyone's asked for to buy something on Mars. Maybe Elon Musk will start a settlement there. Maybe you can use your IRA to buy something on Mars, but it's not a collectible. It's not something you can't do. So wherever it is, you can do it. If you're ever unsure, you'll be able to ask us, but basically that's the rule. The only asset that's off limit is collectibles. Now this page here compares our ultimate solo 401k to a brokerage 401k. So I'm not going to spend much time on this because they sort of talked about it. Again, the Fidelity Schwab might tell you that they're offering you self-directed plans, but they mean a very limited definition comparison to us of self-directed. They mean different types of stocks and bonds and mutual funds. We mean that you can invest in all types of things, not just stocks and bonds and mutual funds. You can use our plan to take the trust over to a Fidelity or Schwab and buy it in the name of the trust. You don't have to, by the way. You can set up a solo 401k at Vanguard, wherever, and it's not in the trust, and you have the trust at the bank, our solo 401k trust at the bank you've chosen, and you can move money between them without triggering any taxes. But you could also set up the trust, and there may or may not be advantage to that. We can talk about more in detail if you have some questions. But these are the types of things that you can see here. Your investments are in your hands with our plan, not at a brokerage. True diversification, real-time transactions, personal loan feature. Some places do have loans, most don't. So you've got a real lot of advantage here over a plan, and you can do everything that in the brokerages as well. But you can do it now through our solo 401k. How it works. So I basically spoke about this, but we'll go over this pretty quickly here. There's 5 steps. So the plan. Every 401k is a plan. Now that's a legal document that tells you what the 401k can and cannot do. But the plan, I like to say, is sort of like a soul without a body. It's an idea. It can't hold anything. Then step 2 is the trust. The trust is, again, it's that legal entity that's regulated by the federal government. LLCs are regulated by the states. This is a specialized trust that can hold retirement funds. So the trust is what you need to get the checkbook control. You need the trust. You need us to create it, a specialized trust, so you can go to a bank and open it up there. And the plan then dictates to the trust what it can and cannot do. But the trust actually holds the cash, the 401k cash, and it will actually own the real estate or the crypto. The crypto will be bought by ABC Investment Trust or the real estate. So you need the trust to give the body to the idea of the plan. That's how those two work hand in glove with each other. We do both for you. By the way, this is a common question I get. Not all trusts are the same. Most people hear trust, they think of family planning, a family trust. That means when a person who's going to inherit a family's wealth, assets and cash when they die, and how to protect it from probate, that's an important thing, but that's not what we're talking about. We're talking about a exclusively trust that exclusively is for 401k retirement funds. Our trust will give you the ability to designate beneficiaries who's going to inherit this 401k trust. And you could put in our beneficiary information, you could say, refer to the family trust, for who's going to inherit and everything like that. But basically, this is a different type, not the same as for estate planning or family trust. This is a 401k trust, but you need the trust again to hold the plan cash and the 401k cash and the 401k assets. So you take the trust to a bank. You can choose any bank, big banks, little banks. You have the choice. We literally have people with hundreds of banks. It may be more than 1,000, because basically the bank is just a place to house a trust. If you walk in there and say, do you open up a trust checking account? And every bank will say yes. If you say 401k, they may get a little bit discombobulated or, flummoxed. They're not going to know what you're talking about necessarily, middle echelon bankers and stuff like that. If you just walk in and say, listen, I want to open a trust checking account, almost every bank will say yes. Sometimes we do need to talk to the banker, our support team, to just explain it to them. But essentially, we got people at hundreds of banks. It shouldn't be a problem. Once the bank is set up, once the trust is set up at the bank, now you have the receptacle to receive the funds. And again, basically you have two types of ways of getting the money in there. You either have a previous retirement plan money that you're going to roll in there. It could be from multiple sources, but it's going to roll into the 401k trust at the bank you've chosen, or you're going to make new contributions. That's based on your earned income. Again, potentially 76,500 per year. Or could actually be double that, because maybe a husband and wife are sharing a solo 401k and they can each put in 76,500 per year. That's over 150,000 you can make from new contributions potentially into the solo. But however it is, whether it's rollovers are unlimited. This is also a question I get. You could have millions and zillions of dollars from previous retirement plans. There's no limit to how much you can roll over, and there's no limit to how much you can profit. We had a guy that did turn $2 million worth of 401k money into 30 million in crypto. He made a lot of money in a short amount of time because crypto, he jumped in at the right time. So there's no limit to how much you can make. There's no limit to how much you roll over. The only limit is the ceiling you can contribute. But whatever it is, whether you're rolling over funds or making contributions, the trust is the receptacle. Once it hits there, once you have your money in your ABC investment trust, you can go buy your real estate. You can go buy your crypto, go take the trust to the exchange. You can go buy your Arabian racehorse, whatever it is. Now you have the 24/7 access to the funds. If you have real estate and a furnace breaks in your property or 401k property over the weekend, you don't have to wait till Monday till the custodian opens up. You don't have to depend on anybody else. You take out your checkbook, you get the furnace guy to come down, and they fix the furnace, and you hand them the check or you give them the money, 24/7 access to it. This is something that's unique because once that money hits that trust, you and only you control it, and you have absolute 24/7 access to that money. Okay, when you sign up with deliverables, so again, this is what we give you. You includes a simple user guide. You can also get my book, $2.99. You can get the plan. I mentioned the plan documents. You get the trust. That's the legal entity. You get all these required plan amendments. And one of the reasons you need us to go pay an ongoing maintenance fee is that since the trust law is centered in Washington, D.C., it's a federal entity. Plans, parts of the rules tend to change, and you need us to update, as a plan provider, to update your amendments. If you don't have updated amendments, it could be a problem if you're ever audited. So you need us to do that. And that's one of the things we'll do. You have an IRS approval letter, a federal ID number, administrative forms, prohibited transaction overview, and banking instructions. You got a whole comprehensive thing there. But the bottom line is that we do give you the comprehensive booklet and things. If you like to read these things and go into the nitty gritty of it, it's all there. If you want to just call us, you'll be able to do that as well. But these are part of things that are deliverable. Delivered. So the timing, the ultimate solo binders are completed in email within 4 business days from when the orders are received. So the truth is that we're going to give you two options here. You see the cost in the bottom left there, $995 once, and then $149 per year starting 12 months after you sign up. We do give you the option of paying in part, $495, or in full. I recommend paying in full because in full we expedite, meaning we get it out to you. Expediting means that sometimes things there's a high volume. Expediting means we put your incoming information at the top of the pile rather than first come, first serve. There was a fellow a couple of weeks ago. He signed up and we sent it out to him the same day. Typically it takes 2 or 3 days, maybe 4 or 5. Occasionally, if it's really busy, 5. I know 4. Usually 4 is a medium, but typically you're up within a week, and it could be even a day or two. At this point today, we're talking about we're still before April 15th, and people are calling and needing it fast. Obviously, you want to expedite in that case. Broad Financial, I mentioned it'll be early. We've been around since 2009. We've got 20,000 plus active satisfied clients. A+ customer support. By the way, A+ you can get at a lot of like Better Business Bureau, Google, and others. You could potentially get that if no one ever called and no one ever complained. And if you're a very small company, they'll give you an A+ to start out with. But what you can't fake are testimonials. Testimonials are people go to the Better Business Bureau, go to these places and tell the world what they think. And if they're not happy, believe me, they love to tell people what they think. Broad Financial not only has the A+ and the 5.0s, whatever, the 4.8s, whatever it is that we have really, it's now over 1,000 testimonials. I spoke to a fellow a couple of weeks ago, and he actually went through, he counted them up for me. And I think that was, he gave me an exact number. It was over 1,500. We have over 1,500 testimonials around the web. And again and again and again, it says they do pick up the phone. They are knowledgeable. It was a great, they helped onboard me, and it was a great experience. So we do have that to show as a track record. We're not just telling you we're a great company. You can check us out. The fifth thing, which again, it doesn't relate necessarily to solo 401k, because you don't need as I mentioned, we have a sister company, Madison Trust, the younger sister, Madison Trust, that is a custodian that's necessary for the IRA. By the way, if you don't qualify for solo, call me about the IRA. I'll talk to you about the IRA as well, of course. But in an IRA, whether you do a checkbook plan or a non-checkbook plan, you need the custodian, Madison Trust. And Madison has over $4 billion in assets under management. When you have Broad Financial, Madison Trust, and a big company here with, a real substantial company with billions of dollars in assets under management, we've been around, we've got a support team, and we've got a great track record. It's not by coincidence. We're not a fly-by-night company. It's one of the things that really does distinguish us. This last page here. But you have a phone number to reach me. My extension is 3331. You have my email address, very easy to remember, Jeff@broadfinancial.com. I'm the only Jeff here. All righty, guys. Thanks.